I'm Danielle Hale, Chief Economist at Realtor.com, and as the holidays are fast approaching, here's what you need to know in December. Readings on the labor market this fall were mixed. The most recent reading on job openings showed that companies pulled back in October, and jobless claims have edged higher, suggesting a weaker labor market. Nevertheless, companies added workers to payrolls in November at a faster clip than in October, and the unemployment rate moved lower, data that point to strengthening conditions. In its November meeting, the Fed noted that it was not yet confident that its policy stance was sufficiently restrictive. While much of the data since then has added to the case that the Fed has done enough, the November jobs data did not. This will likely put more weight on inflation data due out mid-month, just before the Fed's December meeting. Expectations around a cooling economy had translated into interest rate relief as investors shifted into bonds. Interest rates on 10-year Treasury notes had declined from nearly 5% in October to 4.1%, and mortgage rates had mirrored this trend, easing from roughly 7.8% to just over 7% in a similar timeframe. This improvement may spark only a modest sales revival in the fourth quarter of 2023, but if sustained, it could prompt more consumers to consider buying a home in the year ahead. In November, housing data compiled by Sabrina Speianu showed hints of benefiting from lower rates. Home prices rose slightly, homes spent 3 days less on the market, and both active and new listings were higher than in November 2022. This marked the first increase for new listings in the entire calendar year. Meanwhile, market rents dipped for a sixth straight month, according to Realtor.com's October rental trends report, authored by Jiayi Xu. A significant amount of rental units are currently under construction, which is likely to bolster supply, especially in the South. And finally, it's the time of year in which we look ahead. Realtor.com's 2024 housing forecast anticipates that housing affordability will finally start to improve as mortgage rates continue to trend lower and home prices ease back from recent highs. Existing home inventory is expected to remain low, but relief from additional new single-family construction and rental unit completion will give families more housing options in 2024. Of course, real estate is local, and Realtor.com's Top Housing Markets of 2024 report highlights that metros that will see stronger conditions, including double-digit market growth in some cases. The top markets are found in affordable areas of the Midwest and Northeast, as well as in sunny Southern California, where lower mortgage rates are expected to help drive a bounce back from a very slow 2023. You'll find all the details, including full reports and our housing data for download at Realtor.com/research. You can also follow us on X, formerly Twitter, for real-time updates. I hope you take time to enjoy the upcoming holidays. I look forward to continuing to keep you up to date on the latest housing and economic trends in 2024.